Now, traders at UBA expect investors' renewed interest in the Treasury Bills market to persist ahead of the release of the fourth quarter auction calendar. Chuka Nwachukwu, chief dealer and head of trading at UBA, joins me now for more on this discussion. Chuka, thanks a lot for joining us on the show today. Quite interesting numbers we have here. Investors' demand definitely is surging. We are seeing about 530% oversubscription, talking about Monday's bond auction. Walk us through the fine details here in terms of subscription, stop rates, allotment.
Okay, thank you, David, and Happy Independent. So we started the week with the bond auction. Two maturities were on offer, the 2030 and then the 2032. So we saw a significant drop in rate. The 2030, for example, closed at 16%, and then the 32 closed at 16.2, which is quite drastic drop from the previous auction. So system liquidity again played a major role. We opened the week with a system liquidity in the bullish of about 5.6 trillion. As at this morning is about 6.5 trillion. And so that obviously affected the auction. We saw 200 billion was on offer, and then well over 1.2 trillion was the subscription, and then 576 billion was sold. Remarkably, most of the sales were actually were actually on the FPI, the foreign portfolio managers actually took most of the sales, and so that obviously tells you the interest the FPIs have in our market. So that obviously affected the trading in the secondary market, where we couple with the unmet demand, and then of course the system liquidity. We saw a huge bullish sentiment on Tuesday. Those who lost at the auction came into the secondary market to fuel some of this demand, and that has also extended to today, since yesterday was a public holiday.
Yes, but I'd like us to narrow down into the allotments, also quadrupling at this moment. You touched on the number 576.62 billion at this moment. Now, yes, we see the most of the allotment going to the 7-year tenor, and then we also saw the 5-year tenor also see a substantial rise. Your take around the allotment strategy here and what this shift indicates?
I think that what it has clearly stated is the fact that this is the low yield regime. This time of the year, usually the calendar cycle of bond, especially fixed income market, if you follow it greatly, you discover that by this time of the year, yields are always on the downward trend, and this is the time most investors and most traders take profit. However, coupled with that, we also have a huge system liquidity. Again, another factor again is the rate cut. That happened last week by CBN, and then of course another expectation of rate cut in the last in the upcoming CBN, a monetary policy meeting, which is sometime in November. So market is already pricing that in. So the allotment, is clearly shows the pattern in which the yield is headed, and then the pattern where most investors feel that the market will go. Most of these liquidity are also fact payments, some coupon payments, some maturities, and then of course most investors will want to plug in some of this liquidity back into the space. And so that's why we've seen a lot of sentiment, bullish sentiment in the market so far, especially the 1 year for the Treasury bills, and then of course the two maturity that we are auctioned today. On Monday.
And I think the last conversation we had was talking about how yield hungry we have investors at this moment. But let's touch on the expectation around the Q4 calendar, and then juxtapose that to some of the signaling we've also had from the president on the back of the Independence Day speech. This is leaning towards improving macroeconomic stability. How much of a buy-in do you think we'll have from investors going forward into Q4?
I think that the investors' confidence is already there. First of all, before I talk about the president's speech, I think that the investors' confidence is there due to the monetary stand of the CBN, and thanks to the CBN governor, his insistence on fighting inflation, and then of course his insistence on ensuring that there's a level playing field, as well as bringing confidence to the system. And that is why we've seen that the exchange rate has remained stable. Is projected that between now and end of the year, the exchange rate will be stable, and that obviously brings a lot of confidence on the investors. Now, on the president's speech, obviously this president, is the number one policy maker, and so credit must also go to him. He's done tremendously well since he came in terms of first of all, trying to stabilize the exchange rate. Obviously, the CBN governor is playing on the back of his policy, and so the president just simply try to renew the confidence both local investors have in the economy, and so that will further boost monetary stance, as well further boost confidence in the system. Now, going into the rest of the year, and then the calendar that is expected, I think that if you watch the stand of the CBN, especially on the OMO side, you'll find out that for the past 2-3 months, the OMO has always been, they've not really offered a long-term OMO. It is over between November and December maturity. And so that obviously tells part of the strategy. Number one, I think is cheaper for CBN to do the short-term maturity. Secondly, there's a huge maturity within that November, December, and so I think that with the expectation of rate cuts, they are obviously trying to ensure that the international community and the FPIs take advantage of the high yield we have now. For me, I believe that with the next rate cut, we'll probably be seeing around 1 year, for example, probably you're seeing it around 11%. And so it makes more sense for those portfolio managers and then investors to, to front load now, and then, probably lock in 1 year at 15%, 14% level we have now, and then, wait to see what happens before the end of the year.
Yeah, Chuka, we'll leave the conversation here for now. Thank you so much for your time. That is Chuka Nwachukwu, Chief Dealer and Head of Trading at UBA.